Good afternoon. This is Julie Vella. I'm the mortgage originator here at Family First Credit Union. I've been here for 11 years. And I also have with me Lorinda Chasey. She's been here with us a short time, but she has plenty of mortgage experience and banking experience. And so we are welcoming here Lorinda as well. So I just want to talk to you about our first-time homebuyer webinar for 2026. We have some information that could be very useful for first-time homebuyers, such as yourselves. And we're going to start the webinar now. So a little bit about who we are. Here at Family First, we've been serving our members since 1969, so it's been a long time. We were founded to serve the Penfield School District employees. Originally, we were Penfield Federal Credit Union. And today we have 6 branches with over 15,000 members. And we're committed to secure, innovative, and financial solutions for every stage of life. So we have all different products and programs here. And it's a wonderful place that we're local, and we have local processing here of our mortgages as well. Why would you choose a Family First Credit Union? So one, we're a non-for-profit. We answer to our members, not the shareholders. So we take a lot of pride in our members. And we also offer lower PMI rates. So we'll get into PMI and what that is and how it affects your mortgage payment. We also offer fast, efficient underwriting and closing times, and we can do that because all of our processing is here local, and it's right here inside the Penfield branch. Also, when you are working through your mortgage, you can actually speak to somebody live. We're available for you, and we're always right here in Penfield. The mortgage department's here, so you can talk to us at any time. You don't have to call anybody out of state. And again, it's just stating we have 100% local decision making, which makes it easier for everybody involved. Okay. Common terms that you should know if you're going to go through the mortgage process. And number one, we have here appraisal. And basically, we have to determine the value of the property that you're purchasing in order to do the processing for the mortgage loan. So we do have a qualified appraiser. We have a list of appraisers that we use who determines the value. And they can also indicate any issues that come out with the property, such as any electrical, things like that. So that's why we have a qualified appraiser to do that for us. And contingencies. So that's another word that sometimes people are unclear about on the contract because it's a clause in the purchase contract stating conditions that must be met in order for us to give you a loan, basically. So in order for the contract to be binding, and for example, the sale of another home. So if you already owned a home, you wouldn't be a first-time home buyer, but this is an example of a contingency. If you had to sell a home to get to the new home, to use that equity out of that home, that would be a contingency on the sale of that property. And those contingencies need to be listed in the purchase contract. Other contingencies could be the home inspection. And so these days you'd have to put your property inspection as a contingency on your contract in order to get a home inspection. So your realtor would go through with you about the home inspection and the options for that. And we talked about PMI earlier, just brushed on it, but basically PMI stands for private mortgage insurance. And this is on your mortgage loan itself. If you put 20% down from your purchase price, then you will not have any PMI for conventional loans. However, if you don't put 20% down, then you pay this insurance premium, and it's really for the lender. It's insurance for us, basically. That's how it works. So if you don't put 20% down, you will have a slight PMI. And the good part about it with Family First is we have a discounted PMI as we're a credit union. Points is another one that comes up, and this is in determining your interest rate on your loan. And you can pay points to buy down your interest rate, or you can obtain a lender credit if you should take a higher interest rate than what you're technically qualified for, and it can give you a credit towards your closing costs. So anyways, that's points, and those are determined at the time of locking your rate. Credit requirements. So this is really important for first-time home buyers. And you have to have a minimum credit score of 620. The credit score for the lowest possible rate in closing costs is 740. You also must have a minimum active trade lines, and some people wonder what is trade lines. So that is on your credit report. You have to have at least three types of debts, such as a student loan, a car loan, a credit card. So you have to have the active trade lines in at least 3 of them. And we do review your credit for the past 36 months. However, the most important would be the last 12 months when determining any delinquencies. It's very important not to have any late payments or unpaid collections in the last 12 months, because that could hinder your qualification. Down payments. So each types of loans we have listed here requires a specific amount for a down payment as a minimum. So for conventional loans, a regular conventional loan, you can put down as little as 3%. And we got here is 3% to 5% of the sale price. So typically the first-time home buyers are eligible for 3% down. And then standardly after that, it's 5% down. And we have a program called Home Ready Mortgage, which is specifically for first-time home buyers with a lower type of income. And that one requires 3% as well, 3% down. And again, we're just brushing on the PMI about requirement to avoid PMI. And that's 20% of the sale price you would have to put down. So we also have the government loans here, which include FHA, USDA, and VA. Those are the government loans. FHA requires 3.5% of the sale price as a down payment. And mortgage insurance is mandatory on all FHA loans. Sunny May, that one is a state of New York mortgage agency. So it's a New York State loan. And that one, the minimum down payment is 3% of the sale price. USDA is for rural areas, and that one is 0% down. VA is for our veterans, and that's 0% down as well. And also the VA loans, there's no PMI in them. So you don't have to put 20% down. Even if you put 5% down or 0%, there still is no PMI. Costs to consider when you're purchasing a home. This is very important. You should know these costs that you need to consider. Well, number one, you have to, New York State is an attorney-only state, so that means that you have to have your own attorney as a buyer. You have to have the buyer's attorney. And then as a lender, we have our attorney as well. And then the seller would have their attorney. So there are 3 attorneys involved in a purchase. Closing costs, on average, 2.5% to 4.5% of the loan is what that would be. And we do break those closing costs down on a loan estimate for you, so you can see exactly what those costs are. Down payment, we talked about previously, and that's typically 5%. Homeowners insurance, you do have to insure your home that you're purchasing. And we require that you pay 1 year of premium upfront when you purchase the home. So the home is fully insured when you close. Home inspection is optional. And with that being said, you should discuss that with your realtor about the home inspection to see if that is something you want to put as a contingency on your contract or not. But we do not require a home inspection. Taxes are another big one, especially in our area. And this can weigh in on your mortgage payment. So you want to keep an eye on the taxes, which is the property taxes. The town and county tax is in January. The school tax is due in September, and the city school tax is in July. So those are the taxes you want to keep an eye on, is those property taxes. Starting the mortgage process. So the very first place you want to start is actually with a pre-approval, which would be with myself or Lorinda. And we would issue you a pre-approval letter after we receive your income information, such as your pay stubs, W-2s, tax returns, or other types of income, such as Social Security, pension. And we also review your credit. So a pre-approval letter is generated upon the specific amount that you qualify for based on those conditions of your income and credit. And also debt to income ratio, that's important as well. So then, so you get your pre-approval, and then you want to find your real estate agent. So you're going to go work with a real estate agent. We have some to refer if you need one referred to you. And there you would give them your pre-approval letter that we issue you. You would give that to them, and they would start looking for homes within the boundaries and the scenario of the pre-approval. And once you found a home that you like, then you would work with your realtor to write up a purchase offer. And your attorney will review the contract, the purchase contract, and determine whether they will approve it or not. So that's when your attorney comes in place. Home inspection. Again, we're mentioning this, home inspections are optional, but they must be agreed upon in your purchase contract. And sometimes people get that confused with inspection is not the same as an appraisal. So the appraisal is required. The inspection is optional. Next is the application. So once you have the accepted purchase contract, that's where Loretta and I come into play. And you would have that signed contract sent to one of us, and we would start your process from there. And we start a formal application, and we begin it that way. Continuing on the mortgage process. So next we would also order an appraisal. And so we have a list of appraisers that we use to determine the current market value of the property. Like I said earlier, the appraiser can also point out any issues with the property, which would be, like if the electric needs to be updated, if there is missing handrails on stairs. There's quite a few things an appraiser can point out. Next is we take the appraisal and the income information and your credit. In combination, our underwriter will review those items to issue you a mortgage commitment. So once you get the mortgage commitment, then on there will be some items you may need to give to us in order to get your approval. And then next we go to the closing. So that's when all conditions of the commitment have been met and we clear your loan to close, and then you schedule your closing with your attorney and our attorney as well. And then the best part about it is you get to move into your new home after that. What to do and what not to do. So we have some advice just for the first-time home buyers on what to do and what not to do. And basically we want to, what to do is to stay responsive. So that means to work closely with us, the mortgage originator, in providing documentation quickly. And if we ask for something, it's only because we need it. And that's what makes the process go quicker and smoother if we just work together in obtaining the items that we need. And if you're planning to use a first-time homebuyer grant, which is grant season right now, and we have the grants out, timing matters because we need to process those grants at the same time we're processing your mortgage. So we may be asking for documentation for the grant, for grant purposes, and we may be asking for documentation for the mortgage purpose. But both of them are very important that we get those in a timely manner. What not to do. So it's very important not to apply for new credit. So we don't want you applying for or buying a new car, opening new credit cards, things like that, because that's going to affect how much you can qualify for, and it may affect your approval. So we don't want you applying for new credit. Also, don't use or spend more on your credit cards as they are, because that can also decrease your credit score. So that's something you're not going to want to do. Also, don't put large deposits of cash into your account that we're verifying, because cash is unverifiable and we cannot count cash towards funds for your closing. So that's kind of a big one we've had, is that you cannot use cash. You always have to have a paper trail of where your money's coming from. And we can have those forms sourced, such as a gift from a family member. You would have to source where the funds are coming from, and any other documentation we would need to see where your deposits are coming from. Don't delay in submitting requested documentation. Don't delay, because it's only going to delay your process and it could potentially delay your closing date, and that nobody wants. And most importantly, if we request additional documentation, don't panic. It doesn't mean that we're turning you down. It doesn't mean that. It just means that we simply need more information to determine the mortgage, start the mortgage process. So meet our mortgage team. Myself, I am Julie Vella. I'm the senior mortgage originator here. Like I said, I've been here 11 years. There's my contact information, my phone number, and my email. If you need anything, you can always reach out. And here's Lorinda, and she's with our junior mortgage originator, just starting out, but will be very helpful to you as well. Here's our underwriter. We got Bill. He handles all the mortgage approval process, and he works directly with the credit union attorney. We have Calla Rabideau, and she is our mortgage processor. So once you initially work with Lorinda or I, the next step is Calla. She'll be handling the documentation that's needed and mortgage processing. Alice Hooker, she is our mortgage servicer. She handles your mortgage after closing. So she can answer any questions regarding the mortgage after we've closed, such as questions about your payments, questions about your escrow. Alice handles all the escrow payments right out of here in Penfield. She pays your taxes for you out of your escrow account. So Alice is very important in our department. Lisa Willie, she's our mortgage manager, and she oversees the mortgage department. Next, we're going to talk about first-time homebuyer grants and assistance. And I was going to let you know that any questions that you have, I will take right after the end, after we're done with this. So put your questions into the Q&A, and I will into the Q&A, and I'll get to those after we're done. Homebuyer Dream Grant. So this right now is a popular grant that we have, and we currently have grants. So if anybody's curious whether we ran out or if we haven't, then letting you know that we still have grants. So regarding the Homebuyer Dream Grant, the funds start at $10,000. They're to assist with down payment, closing costs, and taxes. The borrower must have an accepted purchase offer in order to apply for the grant. So very important. We cannot put you on a list for the grant. It is something where you actually have to have an accepted purchase contract prior for us to submit for the grant approval. So that's an important part. Also, you must take a first-time homebuyer education course. You can take it online or you can take it in person, but you have to have the education course completion certificate in order for us to submit for your grant funds. And we also must have current pay stubs or current income information. So the income must be qualified based on the total members and the household. So if there are a mom, dad, and a child, that would be 3 members to the household, and we determine the grants based on household members. You also must provide us with the last 30 days of pay stubs. If it is a pay stub W-2 job that you have, we need pay stubs. If you're self-employed, we would use your recent tax returns. If it's Social Security you receive, we would take your Social Security award letter. Sonny Mae Mortgages, again, I'm just going back on what Sonny Mae is. It's a state of New York mortgage agency. They determine the interest rate, and they have certain requirements. There's above and beyond the conventional mortgage. However, it still is a conventional mortgage. We offer the Achieving the Dream program and the low interest rate program. These are the two we offer at 30 years. They're only 30 years, cannot go less than that. It is a minimum down payment of 3%. We can lock your rate for up to 120 days. And you have to have a minimum borrower cash contribution of 1% of the purchase price. Because this is very important to know. So if you have a $200,000 purchase price, we have to show $2,000 in your bank account when you apply. This can also be combined with a down payment assistance loan. So on the Sonny Mae, they offer a DPAL, short for down payment assistance loan, of 3% of the purchase price. So for example, if you had a $200,000 purchase price, you could get a $6,000 down payment assistance loan that could help you with your down payment, closing costs, or taxes. And Sonny Mae also allows unlimited grants. So on top of their down payment assistance loan, you can also stack on top a Homebuyer Dream Grant. So this can definitely help you out in your purchase. Pathstone grants, we do offer these as well. They have down payment assistance loans up to $5,000. You do not have to have a minimum credit score, minimum of 3 trade lines. That was the credit on your credit report. And this grant, though, however, is a payback, and the interest rate is the same as the mortgage. The payback term is 1 to 5 years. It's amortized. Max debt to income ratio 45%. These are details that we would we would review on your information that you provide to see if you fit for a Pathstone grant. Pathstone closing cost loan. So you can be used for the down payment, closing costs, and taxes. The loan is secured to the property, and you must complete the first-time homebuyer education course. In fact, with all first-time homebuyer programs, you will have to take the first-time homebuyer education course. And it's got a lot of good information there that can help answer any questions. Loan can be combined with other grants and down payment assistance loans. So again, this Pathstone can be combined with the Homebuyer Dream Grant and the Sunny May DPAL. We also work with Sheen Housing, which is a nonprofit agency, and they offer up to $3,000 for closing cost assistance. And this one here is a payback as well, but it is at 0%, $50 a month for 5 years. This is for first-time homebuyers who haven't purchased a home in the last 3 years. It must be a single-family home, and you must complete the education course as well. So that one is a popular one as well because it's a quick approval on that one. Any questions? I'm going to go through the Q&A here and see if we have any questions. Don't see any questions. I don't see any questions in our Q&A. So if you do have a question, now's the time to put it in there. I'd be more than happy to answer any questions. I know we kind of rolled through them. There's a lot of information. But again, my email there was on there and my phone number, as well as Lorinda's. You can always call or just call Family First here and ask for Julie or Lorinda to help you with the pre-approval. We'd be more than happy to. Now our season is coming upon us here. We're heading into the spring season, which is very popular for more homes to get on the market. And we also still have the grants. So it'd be very helpful and advantageous for you to take advantage of that. So again, we're here and we're more than happy to answer any questions for you. We're also going to take this whole video here, this webinar, and we're going to put it on our website. So the Family First homepage, this will be on there probably tomorrow or the following day. So if you missed it today, or you have somebody that you know that'd be interested in hearing this information, just go on our website, the Family First website, and we will have the recorded webinar on there as well. So any questions at all? Like I said, I'd be more than happy to answer. If not, then like I said, you can go to the recording, you can share the recording. But for today, then we're all set, and we hope that the information provided was helpful to you. Thank you for your time.